In fact, one Kolte-Patil management will be joining us. The numbers came out yesterday post-market. It's Rahul Talele, the group CEO, who will be joining us from Kolte-Patil. And to start off with, firstly, if you see, after sustaining over 700 quarters of sales for the last three quarters, the sales value in the second quarter stood at close to 632 odd crore. What is your outlook when it comes to the second half of the financial year? Will you manage to arrest this decline on account of the festive season?
Generally, for a real estate industry, considering the many festive seasons in a H2 of the financial year, so H2 are always better as compared to H1, and that was predominant for Kolte-Patil developers if you see the past 4 5 years. And same trend that we can envisage for the current financial year as well. So Q2 was more of a sustenance sales for us, and considering there are multiple launches lined up in the second half of financial year, we are confident of achieving a guideline given to the market of 2800 crores. So we are in line with that guidance.
Good afternoon, Rahul. This is Cheryl also joining in the conversation, and you just mentioned that you're expecting to see good launches in the second half of the financial year. If you could dwell in deeper into that and tell us what are some of the launches that we should watch out for. Also, if you could tell us what sort of a top line potential are you expecting, or what sort of a top line potential are these launches actually reflecting as of now?
So currently, if I want to split that into a three buckets, so currently we have an inventory close to 2,000 crores of unsold units. On out of that, see, in H1 we have launched around 2,000 crores of inventory, and there was something opening inventory that we have already sold. So, and in on top of that, we are planning to launch 3,000 crores worth inventory in the H2. So in total, going forward, there will be availability of 5,000 crores worth inventory in this financial year. And out of that, if you compare in terms of the mathematics, so if I continue with the run rate of 700 to 800 crores per quarter, so we have a sufficient inventory to achieve that strike rate.
Well, if you see earlier, you also mentioned that you're on track to meet the sales guidance of 2,800 crore rupees for FY24. So we are in the third year of the real estate cycle, upcycle. In fact, do you expect the demand to sustain?
See, what we believe, this is the, we are in the first half of the uptick of residential real estate cycle, and we believe that this cycle will continue for another 4 to 5 years. So we are already into a third year, so another 4 years are there. So considering that, till date we have not seen any kind of impact on the demand, considering our walk-ins at site as well as closure percentage out of those walk-ins. But having said that, so we are well prepared to address this scenario if we face some challenge in the future. But I don't foresee any challenge in the near future.
All right, Rahul. Actually, let me talk about your revenue recognition. So if you look at that, that's actually dipped quite sharply in the quarter gone by. Is there any specific reason, any delay in completion of projects? That's the reason why such a dip coming in. Also, do you expect this to improve in coming quarters?
Certainly, see, generally for real estate, since we follow CCM, completed contracts method, so revenue gets recognized only at the time of the possession of the specific units or buildings. So, see, on quarter basis, there can be some dips and highs in this revenue recognition, but we are confident of again matching our guidance given to the external stakeholders of 15 to 1600 crores of revenue recognition in the current financial year, and we are on track to deliver the similar numbers going forward.
Well, if you see average property prices per square feet, now that seems to be on a declining trend. What's leading to this pressure, higher contribution from relatively low ticket homes perhaps?
Very rightly mentioned by you. So basically for this quarter, our contribution was largely from the township sale. So which has a MIG product and a price range of close to 5,800 to 6,200. Hence there is a dip in the price realization at a corporate level. But if you see the project by project level, so there is a continuous improvement in the price realization. But having said that, because of the product mix of this particular quarter, there is a dip in pricing.
Rahul, currently, actually, we are witnessing a K-shaped recovery. Actually, when you look at the luxury market, that's performing better when you compare it to affordable segment. Going ahead, do you think that your sale mix also will be biased towards these high-ticket projects?
So if you compare, if I do a mathematics, the product mix, analysis of the priority launches. So most of our launches are 2.5 BHK and onwards homes. So the exactly opposite scenario used to be there with this company 3 years back. So most of our units were in the range of compact 2 BHK and 2 BHK. So certainly our average price realization have gone up from around 55-60 lakhs to 90 lakhs to 1 cr. And rightly mentioned by you, there is a dip in the affordable housing sale. Simultaneously, there is a good demand for the housing beyond 80 lakhs, and we are targeting that particular customer segment which want to upgrade their housing, or which people who wants to have some kind of luxury housing as an aspiration.
Rahul, then we leave it there. All the best for the second half of the fiscal year. Thank you so much for joining us on the show and taking us through the quarter gone by and the way ahead. That was the management of Kolte-Patil. The stock, however, is a decline in trade with the rest of the realty pack.